Hello. Happy
Hello, how are you?
Friday.
How's it going?
Okay, didn't get the trend day we were looking for.
We had a couple of trends today. I
Yeah.
have my picture today representing the market falling off a cliff this afternoon.
It's actually very good.
I didn't see anything specific, did you?
No, you know what? I think people started rethinking what Janet Yellen said yesterday and thinking, maybe it doesn't make that much of a difference. You know what I think it is? I think that there is still a lot of caution in this market. And people said, I don't know if that's really a reason to buy. I don't really want to be long going into the weekend. China's still not doing good. Look at some of the emerging markets, particularly like Brazil. I think we had talked about that last night in the recap.
Mhm.
You know, there's just a continued overall weakness in the global economy, and I think that leads to uncertainties.
Yeah, Bob in the Facebook group is basically posting that sentiment every day. He's agreeing with you 100%, and he can't like when we're getting these little rallies. It sounds like he's trying to build a position on the short side, or at least justify a position on the short side. And I actually think it's right. The macro picture on the short side is the correct one. I think that too many. I don't know if this is going to come out right. Tell me if it sounds right, but I think too many people are trading right now. That well, I should say they're they're trading with a macro picture, which doesn't make sense because a macro picture is, by the very definition, a longer term outlook, and they're putting too much emphasis on where we open today, where we close today. And I think that's what's driving a lot of people crazy. They're probably watching the market a little bit too much. But from our perspective, which is let's just call it day trading or very short term swing trading, there's plenty of opportunity. It's not like there's not opportunity. It's just the market is not clear right now.
I agree with you. And some days are much easier to trade than others. Yesterday, I found extremely easy to trade, and today not so much. So,
Well, even that being said, we still had some calls out of the market today. So here's the map of the S&P 500 for yesterday. So this is what we were looking at coming into the day. There were some pockets of opportunity. Google, L, Facebook held up pretty well. Financials sold off a little bit. Apple again, a little bit bullish. These guys over here, Exxon, CVX, they're showing some relative strength. And our futures are up in crude oil overnight after this. Here is the tape yesterday, which we had basically claimed this morning. We jumped right back into that range. Well, actually, I take that back. We were actually in the range that ended here for a while, and then we pushed down and basically formed a new range. And I think that the market itself is not clear. I think there's stock specific opportunity, and I think if somebody's struggling to find opportunity right now, they have to do two things: recognize the fact that the market. Bigger picture in the market is not clear, which means if you want to trade the market, you have to be dropping down to shorter time frames for reference points. And we covered that in a lot of detail in both the
right.
pre-market meeting as well as after the market opened. So here's the morning call today. SPY is now in a confirmed trading range, which in my again, this is my call. This is by its very definition, a trading range means there's no bias. It's a pretty wide one, though, 192 to 200. I guess you could say that's tradable, but that could be just 2 days worth of price action. So again, that's still no trend. Um, does look like we get a higher opening. So I wrote, obviously this is written sometime between 6 a.m. and 8 a.m. No, and here's the key that I think a lot of traders right now should be focusing on. No bias means your reference points to read the tape, and again, reading the tape means you're paying attention to the most recent price action. It's going to be shorter if there's no bias, so that means yesterday's high and low and today's open price. And if we could add that, just one other thing, which we're going to show on the chart of the SPY in a couple of minutes. Even if your reference points are yesterday's high and low and today's opening price, meaning is price above or below those reference points, you still need to pay attention to multiple time frames and higher time frames for other reference points outside of today, even if there's not a bias. And that played itself out very, very well twice today. The gap higher in the spiders that pushed into the level that we drew, and then also in the afternoon, it hit the same level and got rejected before the sell-off. So you still need to know the longer time frames, even if you're only day trading.
Right.
So anyway, my opinion today was still trading tight to the vest, and essentially what that means is I am not building positions. We're not holding anything longer. I'm more in I don't know if I want to term it momentum mode as much as I'm not willing to let profits pull back on me right now, and I'm not willing to especially let losses drift away from me. So tight to the vest means we don't have a bias, and I'm going to be hitting my numbers with precision, because there's no reason to believe if I let it fluctuate a little bit more, I'm going to do that because I expect there to be wider, more profits on the table. That's just not available right now.
Right.
So then again, something else we spoke about, today's close will be telling to form a longer term bias. If the bulls can't hold the open price, which they actually couldn't for most of the day, and I was just talking about the close here, the bears will be ready to pounce. And go over here, we can kind of see exactly what we were talking about here. We'll go back to that map of the S&P in a second. So I guess, Myron, if you don't mind, I just want to cover, this was the reference point that we drew this morning, which was essentially the low of these 2 days plus ballpark, again, the area over here. So you had a lot of reason on the gap higher this morning. So we drew this level this morning as a spot to look for. So we basically said we had today's opening price on this 10-minute chart here that printed. We said if it got above that level, which at this point was the opening price here, and then above this one, then we were looking up here around the 196 and change level on a gap and follow through to the upside. And we felt kind of comfortable with getting a gap higher, this follow through after the gap, because yesterday's close was pretty strong. But you can see right here, we just couldn't get a beachhead above that level. So the longs were, I don't know if limited's the right word, but I guess the right way to word it is not as high a probability, because we couldn't do anything after the open, which is why sometimes these heat maps are a little bit deceiving to look at how green everything was. Yeah, everything absolutely was green, but not much did anything on the bullish side after the open.
Right, exactly. We found that in a lot of stocks today. Look at Nike. Nike's up 10% or 9%, and it just drifted all day in the same real tight range. I mean, basically a tight range.
Yep, fortunate enough to get a little bit of trade here, but you're right. For the most part, after the first 40 minutes or so, it pretty much did nothing.
Right. Yeah, we had an inside there, an inside and up, and then so really, if you didn't get in there right at the beginning of the morning, there really was nothing to do.
Yep, and even that was a hard bid at that point because of how much it was up. I mean, you're basically talking about $8 or $9 at that point out of the gate. So continuing with the theme, this was the point that I wanted to make. Yes, we were looking at the previous day's high and low, and yes, clearly we were above. This is the previous day's high. You still needed to know your multiple timeframes and your reference points, and then you can see here, as we had mentioned in the beginning of the day, if we can't hold the opening price in the afternoon, we kind of felt like the bulls would pounce on it. And I don't see anything significant other than what you had said, Marion. Maybe everybody was rethinking.
I just want to clear. You just said the bulls would pounce on it. I think you meant the bears.
Oh, bounce. Yes. I'm sorry.
Yeah.
Yes.
I just want to make sure, so anybody who's listening, the bears would pounce on it if we couldn't hold it.
Thank you.
Okay.
So that ended up playing through, and I guess that's a good illustration there of what I meant by playing it tight to the vest. There are certain market conditions that are much better than others where, again, I'm not saying to slacken your discipline, but what I'm basically saying is sometimes you can accept a little bit more risk in exchange for what you believe is a much better opportunity to earn profit. We are absolutely not in that market right now.
Right. Exactly.
So skipping through to some of the trades that we normally look at, our bullish ideas for the day. I don't know if you remember the list from yesterday, but this list was probably 3 times the size of the stocks that met the bullish criteria. Not that much today that went into that list. And we'll just go through quickly to see why these individual stocks here are green. UA obviously got a push off of Nike.
Right.
And push low. And actually, just something to touch on as well today. The trade that we were looking for today that we felt would be a really good trade, which is a high probability trade. When you get a stock that's bullish, especially this one, which with Nike is in the same sector, when it opens up above the previous day's high and pulls back, a bid at the previous day's high in a bullish stock that pulls back is usually a very, very solid reference point to bid. We didn't pull all the way back, but we did pull back, which is what made this a pretty good long. Now, you had two different entries. You could have entered on this inside candle here early and then added up here on this inside candle. We got back above the open. Or this flag, technically, right? A half-hour flag there. But the point that I want to beat into the ground, which I think I did a lot during today's market, you want to only be long or short the stock. So when this is pulling back, you're not looking to short it. You're only looking for a spot to bid it. So you get an entry, and then you get a second entry, and whether it's the flag or this inside candle. So you could have participated in the long here in the afternoon. And this overall scenario here, which I guess we could talk about the VIX really quick, the VXX as well, that actually started to explode. So that was confirming the move to the downside. So if you happen to be in UA or another stock, when the market internals start to confirm what you're seeing in the market and then the price action itself, you have a lot of things telling you the same thing. So you would have tightened up the trailing stop. You probably would have been, if you like the long for continuation, you could have made a good case for holding the here, expecting another bounce through. However, again, using multiple time frames, you'll see this is the second time in less than 10 days it got up to this 106 level and did not get through it. So if you were fortunate enough to be long here, either one of these two entries, you should know, actually, we should probably call this meeting multiple time frames. You should know that this is the last time it got up to this level, it had a hard time getting through it. So actually looking through this back now, you would have had a very strong reason to be holding this flag at resistance after the stock has already moved that much in that short period of time. So a good trade management discussion there. TSO is another one that's been in the list for the last 3 days. Again, opened lower with a lot of stocks, although this one did not gap higher. And then you did have a couple of entries, whether you wanted to enter on this hammer down here or above the opening price. Either way, again, the important part here is you are only looking long. That's the key there. Obviously, we talked about Nike. Foot Locker is in that sector as well. So again, I'm just covering the longs right now. And again, these are all on the blog in the morning. I just want to keep reiterating that because I do get even saying it on the video every day. People do ask me. So go to the blog, tradingeducationblogs.com. And that's basically what we had on the long side. HFC popped up in a couple of lists, and we'll just go over those before we get into the short sales there.
Foot Locker, in that Foot Locker off of the Nike earnings. That's in the same sector as Nike and Under Armour.
Yep. Thank you.
You're welcome.
Where is my typer is not working. Oh, there you go. This is live, folks. Okay, so you can see HFC here again was in the long list and floated around at the previous day's high with everything else, and then eventually had two decent moves to the upside. And I guess to give everybody an example, this was actually in the 20-day breakout list from yesterday, from today, as well as positive 2% the previous day, as well as positive for the last 5 days, as well as above the 20-period moving average. So it was in a couple of different ones. And FNV was another long to consider. And actually, here's the opening price in FNV again. So because we're only looking for it long, and again, last 5 days above the 20, and yesterday was 2%. 2% from the open. That's very important. That means low to high. This is the trade out of the gate. And again, you're only looking for a long there. So again, we're not second guessing these trades. These literally were in the long list for today. Right. Inside candles are a little bit difficult on these types of days because the very concept of the inside candle breakout is you're looking for a close and open today at relatively the same place, and then you're bursting in one direction or the other to get a trend day. Because a lot of these stocks had a gap this morning, it kind of nullified the inside day, although there were a few stocks that traded higher on the open and then actually ended up having an engulfing candle and ended up kind of right back where they were. The short sale list, for obvious reasons in the afternoon, a lot of these stocks were actually weak out of the gate, never recovered above the open, and we're in pretty solid downtrends the entire day. What's interesting, you get stocks like GPro and AMBA and MBLY that they weren't bouncing, they weren't selling off hard, but they were still shorts coming into today. So I'll give you an example in GPro. I even have this as one of my stocks today to pay attention for accumulation. Looks like it's bottoming out. We get all this bigger volume, but it's still a short sale until we get some sort of volume spike up that shows us, okay, all this is starting to now pop. And $2.50. I mean, can't say you couldn't find something to do.
Right.
AMBA as well. So we don't necessarily need to go through the entire list, but a lot of the stocks look like that. So, and that's actually one of the ones with the engulfing candle to the downside there as well. So I think that there is stuff to do. And, I don't want to make it sound like it's easy stuff to do. I don't want to imply that at all. However, it is easier if you're prepared with longs and shorts. That's my point. You don't want, you notice we don't have a giant list of stocks. We have separate lists of these are the shorts, and then the other list is these are the stocks to buy. So it's very, very clear. So you're going into the day, even if it's a challenging tape, you say, okay, these are the ones I'm only looking for buying opportunities, and these are the ones I'm only looking for short sale opportunities. I'm not saying it's easy, but it's much easier when you're prepared with that type of list, knowing you're eliminating one side of the market and then only focusing on one side. You get Honeywell, which has been in the list for a while. If it comes up, you get some trades like that, traded below the opening price the entire day. MDVN was another one in the list here today. Ooh, MDVN, not BN. Okay. So there's stuff to do. That was $5 out of the list today. And if you're a regular listener, viewer, subscriber of the video, you could see why this was in the list. It's got all the criteria. 20s below the 50. Both of them are declining. It's down for the last 5 days. Yesterday closed at or near the low and below the most recent price action. And again, even though it opened a little bit higher yesterday, you can see here's the previous day's close, and today's opened a little bit higher with the market. It's a sell short coming into today, so you're only looking for a sell short. And right here, 10 minutes into the day, you get an inside candle and a shooting star, 2 different entries to possibly look for a short there. So there was some pretty good opportunities. And then when the market actually sold off in the afternoon and accelerated for $2 down to the downside in the afternoon. So again, I'm not going to deny it's a little challenging, but you put yourself in a better position when you're over prepared.
Correct.
Any call for the market on Monday, Marion? I know we got 2 days worth of news coming out, but I got to think we're going to open lower, no?
That's what I'm going for. I think so too.
Okay. Hope everybody had a good, profitable week. You too, Marion?
Yep. It was great.
Have an awesome weekend, everybody. We will speak to you first thing Monday morning.
All right. Have a great weekend, everyone. Bye, Pete.
Bye, Marion. Thank you.
Thank you.